This Sunday marks the 1,000-day anniversary of the Bitcoin cycle. We started way back in November of 2022, and of course here we are, August 2025. Now it took around 400 days for retail to first start arriving. This was when Bitcoin ETFs were all the hype before they died off, became the hype again, along with the Bitcoin halving that happened last year in April. Then it all died off. Retail came back just for a day or two before we got smashed down again in August of 2024. So 12 months ago. From that point, we had the election. Retail came screaming back towards the tops. And of course, the rest is history with the Trump inauguration, massive sell-off, tariffs, and here we are to today with the latest round of retail investors coming into the space. So Sunday is that big anniversary day, looking at 1,000 days since the cycle low for the Bitcoin cycle. And I thought it'd be a good place to talk about what I think is a conservative cycle top target for Bitcoin and Ethereum. I'll give you my reasons why. I'll go through some analysis, looking at price targets, using specifically Gann analysis and Fibonacci extensions. Hit the like, subscribe to the channel if you're new here. My hope is that this could be your reasonable sounding board compared to what we see out there in the market. And this comes from billionaires and nine-figure millionaires. We have price targets, price predictions from billionaire Michael Saylor to hit $1 million. Now this can come at any particular time and they change all the time. It could be this cycle, it could be 2030. Some of the price targets that are put out there are $21 million for BTC, being a long-term forecast, looking out towards 2046, 21 million price in 21 years. You've also got price targets of 1 million by 2035. Price targets, again, 21 million across all of the news outlets. Cathie Wood, another big name, talking about $2.4 million in a bullish case scenario. So that's in the next 5 years. Bearish case scenario looking somewhere more around 200,000 to 300,000. But of course, these are the ones that are going to make the headlines, the millions of dollars for BTC. And there's plenty of reasons why we would get to $1 million. Logical reasons, as they would put it. Money printing, supplies running out, halvings coming up, hundreds and hundreds of US companies that are acting as Bitcoin treasury companies holding BTC, getting close to 1 million Bitcoin being held by all of the public companies in the world, as you can see with different flags here. You've also got the president of the United States paving the way for private equity to come out. So crypto in retirement accounts, and there is roughly $12 trillion, according to this article, of money ready to go in those retirement plans. Doesn't mean 12 trillion is going to go into the markets. There is 12 trillion sitting there. On other searches, you could find 30 or 40 trillion, just depending on where they gather that data from, where that money is actually sitting. And of course, Trump also putting up his own public offering for his own token, $1.5 billion, which is another publicly listed World Liberty financial company that he's looking to then raise to then go and buy Bitcoin and possibly other cryptos, like we've seen with his sons and Ethereum over the last few months as well. Speaking of Ethereum, we're talking about Ethereum price targets today as well. Other reasons why there's huge numbers that continue to get thrown out there. $20,000 is ETH preps all-time high in 1 to 2 weeks. Now this article is the 10th of August. Seems extremely unlikely that we'll get to 20,000, but at this stage of the cycle, which is why I made such a big reference to it at the beginning of the video, we're 1,000 days into this cycle. Come Sunday, 1,000 days. And it took 400 days just for retail to even start to think about BTC, let alone 500-600 days later with the halving, and then of course another 800 or so days later with the Trump inauguration, of course, presidency and so on. So it is that time of the cycle, at least from what I've seen over the last 3 cycles that I've been involved in crypto, that we begin to see these sorts of targets get thrown out there, and the biggest ones usually make the headline. And now we have Tom Lee and all sorts of other guys who are becoming heads of Ethereum treasury companies. So companies that are essentially buying Ethereum. They think they've missed out on Bitcoin, or they have some sort of belief that Ethereum is better than BTC. Maybe it is. But now they're throwing out targets of the likes of $60,000, which is what Bitmine has thrown out there. And Tom Lee is the one in charge of all of that. Of course, plenty of reasons why it could happen, other reasons why it couldn't. And to some degree, you could consider these old whales that have been in the game for 10, 15 years, as we know with BTC, maybe they're slightly smart money. I think that's possible, and I'll explain why. Dormant Bitcoin whale moves 350 million after a decade of silence, essentially 30 legacy addresses. They've moved 100 odd BTC from each of the addresses, put them together, and then it's basically been selling this off for 350 million. The other week, we saw 80,000 BTC get sold off through Galaxy Digital. That was the likes of the billions of dollars. And we saw this in the last cycle, not these old legacy addresses, but towards this peak here, this run up when BTC ran into January. There was extreme greed, extreme hype. All of the indicators were flashing around this first boom, in particular, the run up in January and then that next top in February, which came in very close when you look at it from a price perspective as opposed to the time perspective. They were selling off. The smart money was selling off through there. There was a lot of volume, and all the indicators were suggesting that the cycle was running pretty quick and seemed to be ahead of schedule. And eventually, price came back, and then the time had to catch up until we got to the end of the cycle. So last cycle, we had something similar where the smart money was selling out. They're not trying to sell the top dollar. That's typically a game reserved for retail. You could call it dumb money if you want, but retail just tries to always buy the bottom if they can, and they always try to sell the top. And if you get in later, that's cool. It's no big deal. But they try to sell the top. And if you sell too early, they hate you. There's always a lot of comments about it. And they just keep referencing back to any of these sorts of headlines of, Bitcoin's got all these reasons why it has to go to these new, fresh, high prices. And you're an idiot. It's going to go to millions of dollars, so on and so forth. That's typically the game that happens every single cycle. So that's a big one that I wanted to reference and try to explain at the beginning of the video when it comes to market psychology, especially as we run up into these tops. We're going to, I think at least, and of course this is all my opinion when it comes to the video, we see a lot of those types of people that just say that it's impossible, that it's going to go down, and we start to get those narratives building on. So I think we understand that. The next thing to understand is the market caps. So market cap is this one here. 2 trillion is where Bitcoin's at, 2.3 trillion. Ethereum, $500 billion, so $500 billion. XRP, $185 billion. Now, the targets, when you multiply them out with how much supply is there and the target that they're looking at, and did some quick numbers, Ethereum at $4,000, as it is right now, $500 billion. If Ethereum is going to be $20,000, it was about $2 trillion. Not impossible. Bitcoin's at $2 trillion. Then you get to $60,000. That is around $7 trillion. Then if you get to Bitcoin's targets of anything in the millions, you're looking at hundreds of trillions of dollars. So this is the multi-millions that we're looking at, like Saylor's targets of $21 million. That's nearly half of the world's supply of money. If I have one of my charts here, this is what Saylor is talking about. Like Jack Mallers, I don't even know why people keep referencing him. It makes no sense. Yes, there is US dollar being continually printed, more money out there, but it's weird and silly. The world's total wealth, call it half a quadrillion. So $500 trillion, half a quadrillion. That would mean that a lot of this money would have to find its way just to Bitcoin, something that's only been around for about 16 years. Of course, anything is possible. And once you start piling in all of these narratives, coupled with the emotion that comes along with the narratives, it gets really strong, coupled with price increasing. And we should know that by now with Ethereum. just over the last couple of months with that price increasing from 2,500 to nearly 4,500, there's nothing better for a narrative than price going up. And price going up brings in more people, brings in the later to the party, and they need hope to expect higher and higher prices. So I know maybe you came to this video hoping a whole lot of hopium. That's okay. Remember, I'm titling something around a conservative, a realistic outlook for the price targets here for Bitcoin and Ethereum. And hopefully it can just be something a little bit more dull in your basket case of tools that you're using for your trading and investing, as opposed to the hype and the nonsense that is continuously thrown at us day in, day out by billionaires, our president, all that sort of stuff. And I say our because, of course, at the end of the day, US essentially does what they need to do, and the rest of the world somehow follows in those paths. As they say, if the US sneezes, the rest of the world catches a cold. As much as we don't want to believe it, you know, I'm here in Australia, it's the same thing. It happens over and over again. So we have seen an uptick, a huge uptick in retail interest over the last at least few weeks. And then in these last few days, we definitely have seen it getting very close to a new 90-day high. So this is for the Google search volume, search trends. The word Bitcoin has picked up a lot. And now I'm not having a go at anyone if you haven't made it this far in the video, especially if you are new to the game, if you've just started to find Bitcoin or you've heard about it many, many times before and you think, bloody hell, it's about time that I look into this thing and maybe I do start to buy something. There is a lot of people in that boat. So don't worry if that's you. Hopefully just use this to your advantage. This is getting close to where we were in the July lows as the market was, the July tops there. And of course we had the August lows from that point. Now, crypto term has also started to pick up, but not as much as what Bitcoin has in the last 90 days. So this is just a check of the narratives and how much interest is driving into the space. 12-month outlook, breaking to new fresh highs again. Bitcoin at 54, breaking past that July top. Let me just check the July figures. There's May, June, a little low here in June, and then we hit that most recent all-time high around that July time. And then if we look back over 5 years, we still haven't reached those crazy levels like we saw at some of those extreme peaks and extreme lows. Here is the peak there, November 2024. Of course, that's when Trump got elected. And then these other extreme peaks, all-time high search volume for May 2021. That was when Bitcoin crashed and ALTCOINS just put in a all-time high and then also crashed. So you've got these big spikes here from January into that top of around 30,000, February to that top of around 58,000, and then April, which was the all-time high at the time, 65,000, and then the all-time high for that cycle was somewhere around November, October, November, which barely wasn't surged. So that's another interesting one that we're going to watch as this cycle continues on towards this all-time high price. The fear and greed, still looking greedy out there. Nothing too crazy, so I think there's still further to go here, even if the market does rest. If we're looking short-term, daily stuff, maybe tomorrow, the next day, Bitcoin does pull back. We hit some of those support levels. That's not what this video is about, and I'll update those shorter-term outlooks in a video coming up this week. So by now we have an understanding of how narratives can build up towards the end of the cycle, a bit of an understanding around timing of cycles. They don't have to perform exactly as previous cycles, nor do the prices, but we've got an understanding of timing and how far things have gone and what to expect around this time, this stage of the cycle, as I talked about with narratives. And we have an understanding of market caps that are absolutely wild targets out there. Gold being 23 trillion, Bitcoin at 2.3 trillion, so 10 times less, and silver down here at 2.1. We also had Ethereum now at half a trillion dollars, 500 billion. So an understanding of market caps and where these price targets can go. Looking at something a little more conservative, we can start to put all these pieces together here. So previous cycles, Bitcoin has never exceeded a cycle previous to it in terms of a percentage. So any of these sorts of targets, absolutely wild if they're to happen in this cycle. I think it's near impossible for that to occur. And as I've talked about, many of those reasons, stack those reasons on this one as well. We have 2,100% in the previous cycle for Bitcoin. So 2021 cycle, 2015 to 2017, you had 12,000%. And of course, the cycle before that, it was going from barely less than a cent, right? Up to $1,200. So it's crazy. 12 million%. I think almost 100% of people would agree that's impossible. 12,000%, I mean, if you talk to those sailors and so on, they think it's possible. I think that's impossible. If we did 12,000%, you're going to look at somewhere around a $1.9 million BTC. Seems relatively impossible this cycle when you start to factor in what market cap you would need for this as well. It's insane. It's in the trillions, and it is more than what gold would be. So I think that's impossible now. Sure, people always have some sort of reason. They've started watching some gold or silver bug, and they just feed themselves all of this gold nonsense, which has been going on for over 50 years, mind you. The gold bug stuff has been going on for a very long time. People catch hold of that narrative and they just can't let it go. They can't see other things that are going on in the world, and they think that's the only way. That's how those narratives continue to build, and Bitcoin might get one of those narratives in its future. Leaving that aside, it's near on impossible for it to get that high, even though gold is up there as well at this point. Yes, there is a shift, but it takes time. So if there is a shift happening, Bitcoin will eventually catch up to gold. Gold will start to slow down where it is, and then over the decades, we will potentially see that. But it's not going to happen in one cycle. The cycle before that, we got 2,000%. So this is a little closer to where things could go. But even still, if we get to 2,100%, Bitcoin's got to get to $342,000, which is about 2.5 times where it currently is, and 2.5 times the price here, 2.5, 5. It's about nearly 7 trillion for round numbers. So 7 trillion on where gold sits is about a third of gold. So I've got that in a post right here. 6.7 trillion, 23 trillion on gold. Yes, there's going to be more money printed on top of that, but you're sort of hoping at this stage for something that hasn't happened before, and it seems relatively unlikely. That's not the way I like to invest. I don't invest on small chances. I like to invest on within assets that have a pretty strong case of outperforming other assets with a very low risk. And at this stage, as I pointed out, 1,000 days into a move isn't necessarily low risk anymore. We're getting into that high risk phase, and I don't want to be taking high risk trades towards the high risk end of the cycle. Still further upside to go. We haven't completely wiped out the upside, as you'll see with this chart. So you've been hanging in there. Hit the like, subscribe to the channel. We've got a sale on TIA indicators as well, as I've looked at in this video. Links to that are in the video description. Okay, the price targets using multiple strategies here. Looking at the swing extensions first. And you've seen me use this before if you have followed the channel. However, I'm going to add in another couple of reasons to this and look to some slightly higher upside. So I want to give you some conservative targets, but also just give one slight hopium target. So broadly speaking, I guess, these are the levels that we're looking at. Look at this white line here, and they are different fib extensions that we've added to the chart using key turning points. Key turning points for the cycle. Pretty significant events happened at those tops and at those lows, and then we use that price range projected off the next turning point of the lows. We also do this to the downside as well to get price targets if we happen to be shorting the market. So that's the use here for the GaNSwing Pro. So just to clear it up just for the moment, we're looking at the fib extensions, and we're looking for price clusters. And you can see a lot of these lines start to form over the top of each other when we look at the extensions on the moves for this current cycle, plus the entire move, first move from the cycle low to the March top. So we're now adding in a couple more to give us I think, a slightly stronger case to where these price targets could go. So the first major target, there are plenty of targets along the way, all-time high, barring all these other numbers, 123 for the all-time high, 124 for a small 50% extension here. Let's get on with the price clusters. As you can see, one forming here, another forming here, and we've got one a little further up, plus I've got one extra one to show. We're looking somewhere in the mid 130s when we average out these prices that are coming in using all of these extensions as you start to see price resistance forming overhead. So this is something that not everyone knows how to use because you're essentially into price discovery now. So we're looking at areas where we would expect mathematically where the markets might look to find some resistance. And so mid 130s is a good one. There's 132, 134, 135.8, so 136, 136 and a half, and then 136,700. So looking into that mid 130s. If you need a number, call it somewhere around $135,000, $136,000. So I like that as a reasonable area there. And the way I'm going to use this is if we start to get closer to the end of this cycle, looking at the time frames that we're talking about, usually the cycle goes on for about 1,100 days. And in the cycle of 2011 to 2013, it did take an extra couple of months on top of that to get you out to that next time frame. So if we got to that point and you start to see the price getting rejected at these levels, then that's a good indication that two pieces of analysis are coming together. Price resistance, one that people mostly understand, time resistance, most people don't understand. So that's where we're getting to the end of those cycles. So mid 130s. Next up, I'm looking towards the mid 160. So if we can slice through this, that's a good sign. If we get rejected, things start to slow down. But yeah, a nice move through that is great. Again, barring the psychological levels like 140K, 150K, let's look to the next price cluster up here around the 160s. You got 161.5, 164, 165, 168. And many of these extensions are coming into that point there. So there's a lot of repeating or rhyming price ranges coming together in those 160s. And that's what I like to see because we know the market does this time and time again. It runs up in repeats. You just take a look at this as an example. There's plenty of them. Don't have time for it in this video. It's beyond the scope of this. But if you want to learn how this works and how you use it in your trading, TIA Premium, there's a link to that in the video description. Otherwise, you're going to have to trust me with this. So the extension here is this particular one. It runs up to 100%. So we got an exact repeat of the first move out of the low. Low, high, off the low, ran up and hit the 100% move. Hit it twice actually, and then rejected from that. So that's why these things are super, super important. That's a brief recap of it. So we're looking here towards the mid 160s. Take an average of that, again, look around 165. So two quick, easy numbers, 135, 165. And I said I was going to give you one more. I'm looking towards 180 to 190. These are larger extensions here, looking around 300% extensions of some of the previous moves down here. And the reason for that is we've seen it in the past. I'll throw in another fib. It does start to get a little bit messy, so I'll take a few of these off. And you can see the 2017 cycle ran up to 300%, 58,000. That was those first moves. And like I showed earlier on, that was when the major excitement, we had big money starting to sell out on this first move out. There was far, far less volume. That's all been recorded in history. This move to the highs was way less volume, way less interest than what this one was. And so we saw smart money selling out here and smart money selling out here. 300% of the top of this range came in at around $58,000. So using the same analysis on the last cycle, which we're now projecting out for this cycle, you can see we had some clean hits at 161%. So a nice fib number there as well. You're looking at this entire range and then projecting this move above. If you got to 200%, that would take you to $135,000. So that's a number that we're definitely watching from this point forward. Above that, 261%, another interesting or important fib number, takes you out to around the 176,000, very close to 180,000, which are the two numbers that I showed earlier. 180 is also a very important number if you follow Gann analysis, which is half of a cycle, half of a circle being 360 degrees. So 180 is also a super important number there. And then if we're able to just pinch the bags here and shoot up higher with all of the hype and the interest that might be building, especially if we break out cleanly from this 7-year resistance level, we've got the next psychological level there of around 200,000, which is the 300% level of the previous cycle. So we've already had a couple of good hits this cycle on this price range, which is why I'm using it. We've got a couple of levels ahead, which are clustering with other price targets around the mid 130s. And like I showed with those in the around the 180s. And then just giving that extra bit of hopium slightly beyond the conservative nature of the video, looking somewhere around $200,000. I think many might not even consider that too conservative, but for the sake of the video, I think looking around that at this stage is potentially good conservative price targets. So what does that mean for Ethereum sitting now at 4,300? So I've talked about the market caps, how 20,000, 60,000 just seems a little bit out of the realm for this stage of the cycle, considering where the market caps currently sit and how much money is in the entire world and how much money is in the entire crypto space. Can ETH get to the same price as Bitcoin right now in terms of market cap? It could. It's just a very, very big ask to do basically like a 4 or 5x. And if it was to do a 4 or 5x, that would take it to around that 16 to 20,000 US dollars for ETH, which is well beyond what Bitcoin has done in previous cycles. If it does get to the 16,000, it is equal to what Bitcoin did in its second cycle. So coming over to ETH here, 1,800% takes you to about the $16,500 level. So $16,500 ETH. I'm going to start out with a bit of the crazier targets here. So Bitcoin did 2,000 last cycle. That comes up to around the 16,000. I'm also looking at that number based on the multiple returns here. So cycle 1, it did $1,400. Cycle 2, 4,800, which is about a 3.4 times of that entire move. So basically looking at a market cap multiplying by 3.4 times. Of course, there's all the differences with the tokens that are produced and minted with the staking and then burnt as well. So that aside, just looking at something nice and simple, cycle 1, $1,400. There it is right there. Cycle 2, $4,800. And what if we did a 3.4 on your $4,800? That's going to take you to around about 16,300. So that's what we're looking at here. And that is roughly around the same target that Bitcoin did in the previous cycle. So ETH is into its third cycle. Bitcoin's into its, call it roughly around its fourth cycle. And it's possible that we do get to that stage, but it is a long shot. And we're looking at ETH going from around the 500 billion level somewhere into the $2 trillion level. So as a hopium conservative target, something out to 16 trillion, which is why I don't think 20 trillion is on the cards, why I definitely don't think 20,000, or and I definitely don't think 60,000 is on the cards here for ETH. So with those out of the way, what do I think is on the cards? I've got to give you something to use here. So we'll keep it relatively conservative, starting from the $16,000 to the 16K down. Well, of course, barring the previous all-time high and the $5,000 psychological level, we have a couple of targets to work with, and I want to continue to update this as we get more data coming through for ETH, noting that we may only have a few months left. Maybe this thing goes out till early 2026, meaning the cycle, and we get some quarter one all-time high prices coming in for cryptos, Bitcoin, ETH, and so on. So one that I've shared in the past is around $5,100 to $5,200, which are the current shorter term extensions. These are the moves off this current move. Essentially, these are the price targets off the current moves that ETH has given us. We look at it on a weekly chart. You can see the extensions here. This price number and this price number here projected off that low and that low come in at that number there. So roughly around 5,100. Now, being completely honest, beyond that, there isn't too many price clusters that I can see apart from this significant high here, which is 200% of the previous cycle and a 500% of one of the legs we've just done here. So one of these moves here. that comes in at around $9,600. So just short of $10,000, which doesn't seem out of the question. And it's just, it's a little further than I'd like above the 300% of some of these moves. But these aren't as significant as major cycle moves because these are just shorter term moves, making up of about 5 weeks. So 5 weeks of price action. Same deal with the previous one, making up roughly sort of 6 to 8 weeks of price action. So they're not as longer term, they're not as large as what you see with the previous cycle. So 5,100 is really the target that I'm looking at first up, seeing how the market responds there. I know it's not far away, but you have to understand, you have to appreciate ETH has come from 1,400 to where it is now. That's 200%. So can it do what Bitcoin has done this cycle? That's another big question that I ask myself. Looking at what Bitcoin has done, the low to the current all-time high, it's done 700%. So ETH, what if ETH was to do 700% from its current cycle low? That seems a little bit more realistic at around $7,000. So we've got 5,200, 7,000, and then the numbers here at around $9,500, just short of the psychological 5 figures, $10,000, which you probably start to get a lot of people pointing at, saying it's going to break 5 figures and never look back into the 4 figures. And those sort of narratives might try and build as we get closer to those targets. 5,200 as a round number. Yes, we're going to look at 5,000, 5,100, 52, but 5,200, 7,000. And that's only just because of where Bitcoin has come this cycle. And then looking towards around that $9,500 figure. Now, of course, there's a whole host of other macro factors, traditional finance, everything that's going on in the US at the moment with the bonds and the yields, and where the stock markets currently sit, getting close to all-time highs, the US dollar in its downtrend, and these are all going to have an effect on what happens with crypto. That goes beyond the scope of today's video, so hit the like, subscribe to the channel. Let's continue to follow where these price targets go. If you made it to the end of the video and you found it useful, obviously hit the like button, but share it with a friend, maybe a friend that you care for and you want to see do well in the markets. Maybe hit those goals together in the long run and not watch each other round trip the markets. Hit the like, subscribe to the channel. Of course, I want to hear from you in the comments section with your highest price targets for Bitcoin and ETH that you've seen and heard out there in the market. I'll be back with you with another update real soon. Till then, take care. Peace out.